Good afternoon from Bogor, Indonesia. Thank you all for finding the time and visiting the Agriculture Working Group and Development Working Group joint webinar. Welcome to the second day of the joint webinar, Enhancing Digital Agriculture and Rural Finance for Food Security. Yesterday, we finished our first day of this joint webinar in a very good shape. This event could become a great opportunity for sharing insights and practical knowledge from G20 member countries on range of critical challenges in digital agriculture and rural finance. To this, once again, we would like to express our great appreciation to our partners from FAO, OECD, IVAT, area, and other international organizations who support us in preparing this joint webinar. Distinguished speakers, moderators, participants, ladies and gentlemen, I'm Wahida, your host for today. Allow me to greet our colleague from FAO, OECD, IVAT, area, and other institutions, our moderator, Dr. Aziz El-Behri from FAO. Hope you already joined us today, sir. And this following speaker for the second day, Mr. Francesco Rampa from European Center for Development Policy Management, Mr. Thomas T. Isel from African Rural and Agriculture Credit Association, or AFRACA, Mr. Prasoon Kumar Das from the Asia Pacific Rural and Agriculture Credit Association, APRACA, and Ms. Turaya Triki from IVAT. Before we start, allow me to inform you our program for today. The first program is the webinar session led by our moderator, and the second is the wrap-up and closing session led by the host. In between, we will have a photo session. We will hold this webinar in plenary format for an hour, followed by a discussion or Q&A for about 40 minutes. Before we start, allow me to remind the participants to please use the chat box for your questions. And for moderator and speakers, you can monitor the question in that chat box. Without further ado, we will have Dr. Aziz El-Behri to share the general context as well as chair this session. Before we start, let me read Dr. El-Behri's short bios. Aziz El-Behri, a senior economist at the United Nations Food and Agriculture Organization since 2008. Currently, he leads the Socio-Economic Development and Policy Group at the FAO Asia Pacific Regional Office in Bangkok. Aziz specialized in climate and food system interaction, agricultural policy and development, trade and market, water policy, and digital agriculture. Before FAO, Mr. Aziz was an agriculture economist specializing in trade policy and modeling at the USDA Economic Research Services from 1999 to 2008. Mr. Aziz has a PhD from Purdue University, a master's degree from the University of Minnesota in agriculture economics, and 2 master's degrees in agronomy from the University of Minnesota and from the Institute Agronomic Hassan, Morocco. Dr. El-Behri, the screen is yours.
Thank you very much. I think I need to.
Mr. Aziz, I'll need you to open the camera and unmute yourself. Okay.
Okay.
Can you hear my voice? Greetings from Bogor.
Yes.
Can you hear my voice? Dr. Aziz. So, ladies and gentlemen, we should wait a bit. This is the problem with the typical. Okay.
Okay.
We'll wait for a while. We just would like to wait our moderator to come in. Okay.
Thank
Dr.
you very
Aziz,
much.
can you hear my voice?
Yes, I can hear you very well. Thank you so much for the introduction.
The screen is yours now.
A great pleasure to be here and to join this forum. My name is Aziz Al-Bahri, and I will be happy to moderate this session and to hear the various interesting presentations today on rural finance. Yesterday, it was digital agriculture. Unfortunately, I didn't have an opportunity to listen to it because just 2 days ago, FAO had organized a big event, regional event, on 1,000 Digital Village Initiative, also on digital agriculture, where we have been quite busy for the last several years. Rural finance and digital agriculture are intimately intertwined, and rural finance is the backbone of agricultural development. We know that there are all sorts of obstacles and challenges and opportunities when rural finance is allowed or restricted, especially for small-scale producers, rural women entrepreneurs, and agribusiness as well. FAO has been working quite extensively on rural finance and has developed a number of tools to train and and build the capacity of not only producers but also agri-food traders and processors and SMEs. Today, I'm hoping that the presentations will not only focus on the importance of rural finance in agri-food transformation, but also make this strong link with the digital agriculture, which is opening, or digital innovations, which is opening a whole new vast field of opportunities for making these innovations feasible and accessible to small-scale agriculture. Before we start, allow me a couple minutes to situate a rural transformation process within the context of FAO new strategic framework, which started in 2022, which places agri-food transformation as at the core of its mandate. And rural transformation, inclusive rural transformation, is one of the two key pillars fueled by digitalization. And we are extremely focused on these two areas, and I think today's seminar will elaborate further on that. So without further ado, I would like to now introduce the speakers, and hopefully with their with their presentations and the follow-up questions, we can illuminate many of this linkage between rural finance and digital agriculture. The first speaker is Mr. Francisco Rampa, who leads the Sustainable Food System team at the European Center for Development Policy Management. Francisco worked on trade policy and negotiations for 2 years at the Department of Trade and Industry of Papua New Guinea. And from there, works at the ECDPM from 2005 until 2008, and was seconded in 2008-2009 to the Prime Minister's office in Italy, G8 Sherpa office. So he will bring for us the European perspective on rural finance and try to link for us the linkages with digital agriculture. The talk of Mr. Francisco Rampa today is to basically elaborate on rural finance as experienced from his perspective. With that, Mr. Francisco, you have the floor. You have 12 minutes for a presentation so that we can have maybe 1 or 2 follow-up questions before the full discussion that will follow the presentations. Mr. Francisco, you have the floor.
Very much for the invitation and the organizers, and for the introduction, the kind introduction. I hope you can see the screen now. I am currently also the strategic advisor to the Italian Special Envoy for Food Security, Ambassador Gatti, who was meant to be here, but in the end couldn't to support a minister in urgent affairs. So I am presenting, if you want, on his behalf, and it is a pleasure to be here and be online with some of the colleagues I was working last year also as part of the G20 Sherpa office preparing the Matera Declaration. In fact, my presentation today will be composed of two elements. One is reminding ourselves, which is also, I think, of interest to everyone and the friends from the Indonesian G20 presidency, of connecting one presidency to the next and understanding the importance of reaching consensus amongst the G20. So I will be making reference to what the Matera Declaration issued last year said about the importance of agriculture investment and rural finance to support smallholder farmers and SMEs. And then on the second part of my presentation will be drawing some lessons indeed on how investment for rural finance is reaching or not the ground, and some of the lessons on the way this has been looked at in the donor community, and what also the donor community can do to stimulate better access to finance in the rural areas of low-income countries. So just as a reminder, of course, and with the background of the Italian presidency logo last year, I was personally involved in the drafting and negotiating of the Matera Declaration. Clearly here, the reference is the paragraph 6 of the Matera Declaration on Food Security, Nutrition and Food Systems, because that focus really on increasing catalytic investment. So there was a commitment by all G20 to work with partner countries for increasing catalytic investment for food security, nutrition and sustainable food systems as a crucial pillar of the response to the pandemic, like national plans and international action. And I think here the core, without of course reading the whole paragraph again, the whole core is toward the center of the paragraph, where there was a strong recognition by all G20 that public policies and resources such as public procurement, public development banks are very crucial because they address market failure and then can provide risk tolerance compared to other financial institutions. And this is very important to stimulate private investment and blending finance to improve food security, etc. Because here the point that others I'm sure will touch upon as well today is that agriculture and rural areas remain territories and topics that are risky for our investors' perspective. So de-risking the investment in agriculture is the starting point of increasing access to finance. And that was clearly recognized, and the G20 committed to increase catalytic investment to stimulate ultimate private investment using also public resources. Now, as a way also to highlight that the declarations are not just pieces of paper, there has been an important role of the Matera Declaration. Some have called it the strongest G20 call to action ever on food security and adequate nutrition for all, because it was really focused on just 6 thematic priorities, one of which was investment, and led really this unprecedented level of consensus amongst the G20, led if you want to contribute to the momentum that was absolutely necessary last year for a number of international processes to be successful, and also for some of the initiatives that we are seeing this year, in particular vis-à-vis the emerging food crisis. So, for example, this paragraph 6 was also referring in particular to the role of public development banks towards the end of the paragraph, and therefore it was very important the Matera Declaration backed the Financing Commons Summit that took place in Rome in October under also the Italian G20 presidency. It is a gathering of all public development banks worldwide, and they launched with heads of state level consensus. They launched also a platform for green and inclusive food systems, which was very important. It continues to work to try and see how these large resources of public development banks can be devoted to investing in sustainable food systems. There is more. The Matera Declaration also led to the heads of state of the G20 in their own declaration of the G20 to particularly highlight in the follow-up to the Food System Summit. The G20 Matera Declaration was very important for the success of the preparatory process of the Food System Summit that took with the pre-summit in Rome in July and then in September that took place in New York to support that process, to build consensus on the importance of certain topics, and the heads of state summits themselves highlighted the importance, as you see in this paragraph 15 of the leaders' declaration, of improved financing tools for sustainable food systems. So if you want, paragraph 6 was transformed and translated by the heads of state in the full support of the finance architecture that was emerging out of the Food System Summit. As well, not forget that this year the situation is getting worse on food security. So for example, Italy, Turkey recently co-chaired at the ministerial level a meeting to discuss how, in particular, the Mediterranean region can react to the food crisis, and the spirit of the Matera Declaration is pretty live in that process that started on the 8th June ministerial event. Now, turning more specifically and drawing on the lessons that come from Europe and the way, in particular, European countries are supporting in different ways, bilaterally, multilaterally, etc., African countries, in particular, to the shore, southern shore of the Mediterranean, and drawing on some of the work that I've been doing over the last few years with ECDPM, but also with FAO colleagues in the headquarters and the investment center. I will be presenting some lessons on how to stimulate agricultural investment and rural finance. Of course, first one is that there is no one-size-fits-all approach. So let's not hope today to put forward a magic wand and one recipe that will stimulate. It really depends on the context, which value chains we're talking about, what is the political economy in a particular territory. So there's always, everything needs to be based on the context and the different measures, policies, and investment that needs to stimulate rural finance, really context specific. Financial sustainability is absolutely a key criterion for the development of rural value chains. We speak, including in the Food System Summit, outcome, etc., of social and environmental sustainability being absolutely crucial. We totally agree to that, but let's not forget that financial sustainability will ever be at the core of any investment. So there is simply no way to attract an investor in the absence of a proper economic plan and a sound financial sustainability of what the rural areas demand as investment. Number 3 is the fact that by linking different steps of a particular value chain, you can reach bankable project or a likelihood of a project to be bankable. Financing opportunities can be unleashed if you are really taking a value chain approach and you start from understanding what is the input level needs, but you also look at the way consumers are demanding, you look at transport in between these two. Really making linkages along the value chain is very crucial to be credible in attracting investment. Number 4 is that there is no financing and investment doesn't happen in a vacuum. So of course the policies, the enabling environment are absolutely important, and in general every national agricultural finance policy should specifically target smallholder-based value chains. There is often a level of an agricultural finance policy in every country, but very few of them target specifically the need of smallholder value chains, and I'll be talking about that more in a second. Number 5 is let's not forget the importance and the centrality of women, because there is a huge potential. Women empowerment and better access to finance, which tend to be much lower than men on average in every country, really has the potential to be having a magnifier effect on territories and augment certainly the inclusiveness of development. Number 6 is that we should really focus on risk assessment and mitigation. In that sense, microcredit targeted tools specifically for the informal players are very crucial. As I said, agriculture, unfortunately, in most countries is still a very risky business. So the way risk assessment is prepared and the ways it is mitigated throughout an investment plan is absolutely crucial. Clearly, the 7th lesson is that a range of collateral should be enlarged. You cannot only use land as collateral because that's difficult. There is also governance issues, unequal access. So there are good cases of banks and credit organizations looking at other collaterals, for example, having a contract with an off-taker or even at being a member of a collection center sometimes. So we need to be very open-minded in the way we organize collaterals for investment. Similarly, warehouse and warehouse receipt systems are a technical way to stimulate financing because it is a way to meet demand and supply. And last but absolutely not least, which is partly of, I believe, the idea of today's meeting, is that public-private dialogue and cooperation is absolutely crucial. They can come together, public and private financier, to the risk. They complement each other in the way they invest, but also they can better find an enabling policy environment and intervention. Without the input of the private sector, you will never be able to stimulate investment. And now, more specifically, let me come to the last part of my presentation. In particular, and that's also the role of donors, and in particular, this is the case for the European Development Finance Institution in the last few years and going forward even more, to devote a lot of resources to blended finance. So really coming together the power of private investor and public investor to stimulate rural finance, because this is exactly the way to de-risk smallholder-based value chains, by having this concessionary funding at the public level that can mobilize additional private capital. The public providers of blended finance, for example, by using their resources, the public development banks I spoke about and were already included in material declaration as key actors, for example, should use their criteria, the way they allocate resources to a particular private investor, to stimulate change, for example, in the way minimum ticket size of investment should be reduced, because if it is too large, there is no way smallholder farmers will be able to contribute to their share of the investment, but also the flexibility of their interest rate and the payment schedule. We have seen in Africa a lot of cases where there is an availability of a guarantee fund, there is an availability of a public resource, but then the private resources do not flow in the end to the smallholder farmers because simply the repayment schedule doesn't match the planting season, or because the interest rate is fixed at the beginning and then it fluctuates. So there are good cases where, for example, changing the interest rate on a yearly basis based on actual business and value chain trends has led to much more disbursement at the end for rural finance. And let me conclude by pointing to the fact that in particular within the blended finance mechanism, guarantees are particularly important, in particular portfolio guarantees, because they really give resources to a bank, to a commercial bank or a financial intermediary on the basis of accessing a particular set of actors on lending to a particular set of actors or to a particular set of objectives, including the SDGs. So we have examples like the European Fund for Sustainable Development that is issuing guarantees. For example, this Nazira facility that is very active, for example, in East Africa, where, for example, the Dutch Public Development Bank put forward a 50 million guarantees to the Equity Bank on Kenya to cover loans on the basis of these loans really going to borrowers that are in the agri-sector and then are classified like women and youth. And some of these performances are even performing their initial targets because they really remain at the level of allowing the commercial bank to operate with its own market-based credit parameters without necessarily the donor influence, but they clarify the target, and so they are a very effective way of targeting a specific set of players, in a particular case, women and youth. And also they have a large scale potential because the resources that a public development bank can put forward, and if you imagine stimulating a private commercial bank like Equity Bank, the reach of the clients is really huge. So the only other message that I can say that we have been hearing on the ground in Africa is that not only commercial banks should be receiving the type of guarantees, but impact investors are out there, and sometimes the way they assess risk and the way they do risk sharing mechanisms are actually better aligned to the smallholder clients, even better than some of the commercial banks. So there's a lot ongoing. I thank you very much for your attention. I hope today's debate can stimulate discussion. You find here the website where some of the information and the experiences I've been talking about can be tracked in papers together with the ECDPM and the FAO colleague, and I very much look forward to today's conversation. Thank you.
Thank you. Thank you, Mr. Rampa. A very full presentation indeed, very rich. I really couldn't stop you past the 15 minutes, but let me give a short summary of this really outstanding starting presentation. Yes, thanks to Italy's G20 leadership last year in the Matera Declaration, we talked about the importance of public banks as as a de-risking intermediary. Agriculture and rural areas is of course a risky proposition for investments. So you need, in addition to private banking, a role for the catalytic investments. That was very clearly described. The lessons you put out: no single solution fit all. The context matter for these investments. Financial sustainability and economic viability is essential. You also mentioned the critical importance of linking these investments to value chains, which will then bring the economic value proposition into bear and make this investment possible. And of course, the essential, the critical importance of focusing on women and women empowerment as one of the key engines to facilitate the investment. So much coverage, excellent presentation. Thank you very much for that. So let me now move to the next presenter. I have the pleasure to introduce Mr. Thomas Essel, Secretary General for Africa. Africa is the African Rural and Agriculture Credit Association, which is a network of over 100 financial institutions headquartered in Nairobi, Kenya. Mr. Essel has many years of experience in economic and development issues. He has provided leadership in collaboration programs with governments in Africa, development partners, and the private sector. Before joining Africa, he worked in Bank of Ghana for over 22 years, holding different positions. The latest positions being head of external financial relations and head of the Bank of Ghana. So he comes with a lot of financial and banking experience. Mr. Essel, you have the floor and have about 12 minutes to give your presentation. Thank you. Over to you.
Thank you very much. Thank you very much for the introduction. Okay, I'm coming. Okay, thank you very much, moderator and listeners. I'm glad to be part of this great program that has been organized by Indonesia Presidency. The outline of my work follows this direction: introduction, key issues on agri investment, enabling environment. Those key areas and key issues are enabling environment, climate change, access to finance, and then deployment of technology as an enabler. And then after that, we will have few remarks on way forward. Okay, this is the continent that we are talking about, Africa.
Mr. Tessel, can you, if I may, can you move your slides, because we don't see the slides moving. If you can put
Okay.
it in a full slide mode.
Okay.
Can you put it in a full slide mode first, so that we get the full screen, and then yeah, and then move it to where you are right now in your presentation. Thank you.
Okay, thank you. Thank you, Mr. Moderator. My presentation will look at the issues on agri investment and rural finance from the perspective of Africa. And the outline is like this. We'll have the short introduction and then followed by key issues, which include enabling environment, climate change risks, access to finance and deployment of technology. And then we will end with the way forward. This is the continent that we are talking about. And there are some stylized facts which will guide the presentation as we move on. It is the second largest continent and the most populous after Asia, with 1.3 billion people. Almost 60% of the region's population are under the age of 25, and 70% are under the age of 35. It is the world's second fastest growing region after Asia, with an annual GDP growth rate in excess of over 5% over the last decade. Less than 1 adult out of 4 have access to an account at a formal institution. And that is the problem that we have. This is so because in Africa, we have smallholder farmers dominating the agricultural sector, which employs over 60% of labor. And because of their condition, their access to credit is very much restricted. We will look at these 4 key areas and how the small holders are working and how they can work better with some support. If we look at enabling environment, the ease of doing business in Africa is improving when you compare with a decade ago. Places like Rwanda, Uganda, Kenya, Ghana are doing quite well. In fact, the German presidency in 2017 initiated a compact with Africa to promote private investment based on reforms on which agriculture is part. 12 countries in Africa took advantage out of the 54 and then entered into these compacts. 2 years later, we had some of them performing very well, like Rwanda even performing above France and Belgium. So we see that when we have a good environment, firms and smallholders and value chain actors will thrive in Africa. However, the investment coming has been very slow. And coupled with that, we also have governments also slow in implementation of policies. If you look at the Maputo Declaration, which was signed for African government to commit 10% into agriculture, including improving environment for investment, very few countries have been able to meet that threshold. And even that is not sustainable. They come 1 year, the following year they go down. There is the issue of risks, of policy changes, which we also need to look at, because whenever policies change, they give direction to what the government wants. It can shift production from, say, cocoa to maize, or from maize to groundnut. So it is something that has improved over the years, but we need to get it improved better. A challenge which perhaps African government must also look at will be lack of an awareness or non-existence of some policies. Policies may be there, they may be good, but if people don't know, they can take advantage. A research done by Grow Africa recently showed that only 30% of 133 businesses surveyed felt that they were being supported by effective national policies. So policies are key. And then infrastructure. In Africa, we have inadequate infrastructure. These hinder smallholders and MSMEs in agriculture, even in case of even transporting food from one area to another. Road networks, communication networks, power issues. So even where they are there, what can we say about the quality of the infrastructure? This too, the research said that 55% of respondents showed highest dissatisfaction with the quality of infrastructure. And the critical areas that were mentioned were with power, that is stable electricity, fiber, broadband for internet connectivity, transportation, and then irrigation. So let me emphasize that governments are doing what they can, but given the limited resources, we still have these problems there. And then cross-sector collaboration, which is key, which was mentioned earlier. Bureaucracy is also going down because of the ease of doing business, which are part of reforms that African governments are undertaking. If we come to climate change, this is a threat that is devastating businesses and production bases. There have been vast locust swarms sweeping across East Africa since 2020, some of them damaging crops, sweeping away farmlands, and then livestock. Drought in South Africa devastating agricultural production. And AFDB has even come out with an estimate that Africa is losing between 5 to 15% of GDP because of climate change. And this puts pressure on poverty and hunger, which are the first two SDG goals. We have about 98 million people facing acute food shortage. And this is a grave situation which reflects even the food imports that Africa have now, about 35 billion a year. So we see that climate-related financial risks have a lot of implications for financing, including insurance. In Africa, insurance penetration is very low, just about 3%. So coupled with little financing from financial institutions and governments, it creates a whole lot of barriers for smallholders and for micro, small, and medium-scale enterprises on the continent. But there is hope for Africa. There are new ways that entities are coming out to adapt to climate and then reduce some of the risks. The Kenya Bankers Association, for example, has developed and adopted sustainable finance initiative guiding principles since 2015, which warrant all banks to adopt risk management strategies in their credit appraisal processes to analyze loans based on environmental, social, and governance metrics. So at least if you want a loan from a bank, you must be able to comply with some of these principles. And that is good for climate, adapting to climate change. So what do we need to move on? We need low-cost funding and blended financing, as was mentioned earlier, because it becomes cheaper and in many cases come with technical assistance. Private lending institutions and then impact and angel investors are also in the system, but how many are they in Africa? They are just scattered, so their influence is minimal. And what is even more important, which was also mentioned earlier, is that even the level of ticketing, a smallholder in Africa will need $1,000, $5,000, $10,000. But when they have ticketing, which is $1 million, then Africans can see the resources there, but they cannot access it. So we need partnership for us to grow, to be able to take advantage of things like the Green Climate Fund. We need to build capacity, which we need support outside. And thanks to some public institutions, public banks, or development finance institutions, some of them have already adopted and are implementing some of these strategies, building capacity to be able to access green finance. Access to finance is the most formidable challenge that value chain actors and smallholders face in Africa. They are the ones who produce, who process. They go through wholesaling up to the market. And yet they lack financial services because the biggest challenge they have is accessibility and affordability. So even when they access, they should be able to afford, but they have limited credit history. So the banks will not consider them. There are high transaction costs on them because they may be far away or too small to sell. Information about them, the financial institutions may not know much. So they place high risk premiums and stringent collaterals on them. 1 in 3 SMEs in North Africa, as well as about half in sub-Saharan Africa, cannot or can only partially realize their credit requirements. And IFC has estimated about 421 billion as the financing gap that we need in Africa to ensure food security. Financial institutions in Africa are lending only 4%. Yesterday, we heard 10% from Indonesia. So looking back at what we have been doing, the kinds of interventions, we see that governments have come out with dedicated rural finance institutions, such as rural banks, to help. They did something. They did not realize the goals. Special projects were set up as other strategies. Guarantee funds were also set up later with partnerships. But in all these, the biggest issue was repayment. If borrowers cannot repay, guarantee schemes are not able to continue. And the kind of blended finance that we have on the continent has been very limited. But there have been renewed approaches led by African Union, which is promoting the use of digitalization by all countries, and they are supporting that. We have private and public sector approaches, which are partnerships that are yielding good fruits. Examples are incentive-based risk-sharing systems of agricultural lending. These combine de-risking instruments such as guarantee funds, technical assistance, and insurance. And this becomes attractive to financial institutions because some of the risks are being taken away. And so in Ghana and in Nigeria, these schemes are going on very well. There are others in Kenya, Togo, and other places. Malawi has come out with a decent public-private partnership called Malawi Agricultural and Industrial Development Corporation, MAIC. It was launched only in 2019. But what makes this stand out is that they have a robust governance structure and an independent management system, no interference from government. So this becomes appealing even to donors and development partners. And once the governance is good, it is something that is promoting wide dissemination of information and financial resources to the agricultural sector. The last is the deployment of technology, which is very important, and interfacing what we did yesterday. If agriculture has been digitalized, why don't we digitize finance also so that agriculture can move at a faster pace than we have all anticipated? Financial institutions have adopted mobile money, mobile wallets to fund disbursements and repayments, and to address the high cost that normally they were incurring when they were not using digitalization. They now have access to alternative credit scoring instruments, which help them to leverage on data on borrowers, which also hitherto they didn't have. And now there is a crave or the hunger of financial institutions to partner value chain actors who know the sector very well to work. And this is also promoting increased productivity and production in the sector. Let me give you some examples of innovations in the sector by other players other than financial players. One Acre Fund in East Africa has combined field work with technology. The technology is the digital aspect of it, using M-Pesa. So they believe that they can not only go digital, the human touch is also important, especially in Africa, where literacy and digital literacy is very low. So they have combined both, and the outcome is that they are reaping 98% repayment rate using M-Pesa, which is a digital platform. And the clients or the borrowers are increasing in their incomes to the levels of 40 and 45%. Acre Africa has combined, is an insurance company. APA is an insurance company. They have combined with M-Pesa, and the two have also come together to expand extensive distribution channels using voice messages, SMS, USSD, and data to reach farmers. And this has allowed them to reach farmers with insurance, thousands and thousands of them in the whole of East Africa, and they are expanding to other regions. DigiFarm model is a model that has been propelled by Safaricom, which is known throughout the world. And this model is called both bundled and end-to-end services. In fact, the whole agriculture system from production to market is digitized because they are a technology company. It is buyer-driven. So when a buyer requires particular products, they do profiling. People they have trained, they call DVAs, digital village agents. When they finish and they approve, then they go to financing for the bundled loan and insurance. Once that is approved, they go to the input suppliers, who are also called DigiFarm master agents, who have been trained by DigiFarm. And then from there, they go to the production, the field, where mechanization is also digital. You access it. And immediately after that, it goes to the market. And Safaricom, let me say, DigiFarm buys all the products at competitive market rates. The last one example I'm giving is called Grow For Me, which is an aggregator, micro aggregator platform, which is also web-based. This is a young man who puts these ideas together and combines financiers, farmers, aggregators, warehouse operators, and then off-takers. So digitally, these are connected. Farmers are connected to aggregators. Aggregators are connected to the warehouse where they check for standardization, quality, and quantity of the products, the cereals that are produced, and then off-takers take them. So these are some of the initiatives that are going on in Africa, both non-digital and digital. And going forward, we have these proposals to be considered by governments of Africa, by private sector, and by G20 countries. Refocus attention to investment in agriculture. This goes particularly to African leaders. Create successful public-private partnership models and redefine the role of the state to improve information flow. This is critical for investors to come in. Governments and G20 should promote blended finance. We see that especially the concessional and the equity type are good for the SMEs and then the smallholders. They can take advantage of this without bankrupting themselves. And this is specifically also to governments and G20. They should pay attention to the youth of Africa. This is a big issue And as we said earlier, we have the greatest number of youth, a population under 25, 60%. We need to take advantage of their strengths and of their readiness to get them into innovative areas in agriculture, which also take country and youth priorities into account. This is key, especially for G20 countries. If they really want to stem migration, when they don't have anything to do, they will migrate. So let us all look back to the youth in Africa, governments, private sector, and then G20. The following two are for G20. They should identify a core group of countries where international assistance for promoting agriculture to ensure food security is likely to have the greatest impact, and target them for investment. They cannot help everybody, but at least some are ready. Some have good environment created for that. There should be a time where a G20 country can rise up and say, I supported Kenya to come out to ensure food security. I supported Ghana to be food secured. I supported Nigeria to be food sufficiency. This should be a goal of G20. Because up till now, with all the support, we still are where we are. And the last one is that G20 must support and honor their commitments. Yes, they make the commitments, but fulfilling them has been too slow. We think that Africa is ready. We have noted the challenges, we know them, and we also know the potentials that we have. What we need to move forward and what we require to be food sufficient is to get financial support, to get technical support, to get partnerships, and then perhaps fair trade rules. This they should try to do, and I believe Africa will become food secured continent. Thank you very much.
Thank you so much, Mr. Tessel, for this and second rich presentation. I enjoyed every bit of it. I thank you so much. Just some highlights before we play your video. Yes, the business environment is improving in many countries in Africa, and that's a good news. There's still a challenge from the African countries to meet the Maputo Declaration and stick with the 10% threshold. Climate change has been devastating much of the infrastructure and is believed to cost between 5 to 15% of GDP, according to ADB. There's a lot of climate-related risk. Access to finance by value chain actor remains the biggest challenge. And there are some notable initiatives to incentivize risk sharing. 3 excellent examples were given about how technology can be melded and combined with digital innovations. The 1 Acre Fund is an excellent example, and DigiFarm model, as well as Grow for Me. And a final slide and recommendations. I'll pick your main point about the plead for refocusing on youth for Africa as a solution to stamping out migration, but also growing Africa and ensuring, with the help and the support from the technology and the finance and partnership, to make Africa a food secure. Very rich, very well delivered. Thank you so much. Even though it took a little longer time than the time allotted, but it was very difficult not to stay engaged. Now let's play the short video that I think is programmed after this presentation.
An aggregator or a farmer is ready to sell his commodities to Grow for Me through the Ghana Community Exchange Warehouse for instant payment on the micro aggregator platform through Grow for Me. So informing the warehouse of his goods available, the warehouse officer proceeds to test his commodities. To test, he would take samples of the commodities from the middle part and run a couple of tests to ensure they have the right moisture content, no aflatoxin, and they have the right quantity. After being satisfied with the tests carried out, the farmer can then proceed to request for payment from his goods, which will then be approved by the warehouse officer. Now, the farmer, to request for payment, dials the code *800*008# on his phone. Let us take a look at the walkthrough and experience of the farmer or aggregator on the microaggregator platform. To dial in the code, he is presented with a menu. Option number 4 as an aggregator or a seller. Then he proceeds to indicate which commodity he's selling, in this case, white maize, option number 1. Then he indicates the warehouse where he's selling into. In this case, he's selling to the Tamale warehouse, option number 2. Then he proceeds on to indicate whether he wants to sell or he needs financing. He selects 1 to sell, and then we ask him how much he's selling his maize for. Indicates 200 cedis per bag. Then we ask him how many bags is he selling, where he responds with 2. Then we respond with our selling price, which is he decides to either accept or to reject. He accepts to sell, and then he's presented with a number that he can call. The warehouse officer is notified via SMS, and he will then proceed to initiate approval for payment since he's received and tested the commodities. Here it's a walkthrough on how the warehouse officer will approve transactions. By the way, the farmer is excited and tells him he's going to invite his other farmer friends to sell to grow from him. So to approve the transaction, the warehouse officer dials the code *800*008#1#. Then he proceeds on to KYC the aggregator since it's the first time he's selling. He's presented with the menu to KYC the aggregator or farmer, option number 3. And here he enters the aggregator's phone number or the farmer's phone number, and the system responds with details of the farmer's ID to enable him KYC. Once he passes KYC, he responds with 1 yes, and then proceeds to approve the transaction. To approve the payment, he will dial the code again, *800*008*1#. Then he would be presented the menu where he would select option number 2, that is to receive commodities brought, and then he would enter the phone number of the aggregator, which he already has. Upon entering the phone number of the aggregator, the system will pull out the records of that aggregator and farmer, for him to confirm how many bags that he has received. He then enters the number of bags he's received. Then he will indicate whether he wants to confirm that these are the bags he has, and once he does that, the payment is done. The farmer receives instant payment on his mobile phone, and the farmer is ready to go.
Okay,
to bring more
yeah,
commodities
to
to
you.
sale.
Okay, thank you very much. Thank you, Mr. Tessel. Now let's move to the third presenter. Mr. Prasun Kumar Das is currently the Secretary General of APRACA. This is Asia Pacific Rural for Agriculture Credit Association based in Bangkok. FAU has had a pleasure to work with APRACA over many years. Mr. Prasum has a PhD in agronomy. Sorry, I think there is some interruption here. I hope it's stopped. If I may continue. Okay, thank you. So let me introduce Mr. Prasum fully. His main areas of work are to synergize agriculture and farming system with the value chains and access to finance. So he's connected very much with the finance area and with smallholder agriculture. He is a recognized leader in the areas of value chain development and finance, agriculture for nutrition, and linking farmers with the support systems in South Asia, Southeast Asia, and Sub-Saharan Africa. So without further ado, Mr. Prasun Kumar Das, you have the floor. And 12-minute presentation, please. Thank you.
Yeah. Thank you, Dr. Aziz, for this introduction. Good afternoon, my fellow speakers, hosts, The organizers of this agri-working group, development working group from Indonesia G20 presidency, and all the listeners to this webinar. I am going to share my presentation now. So it's a short presentation. I'm sure that I can finish it within 12 minutes time. I hope you can see the presentation, all of you.
Yes, we do.
Okay, thank you very much. So I will be short and brief on the presentation, but I will start with a little bit of a different, like we start with the key messages. Then the market segmentation and the financial needs, technology accelerators, evaluating the financing and investment solution, innovative rural finance models, and finally walk the talk, broad areas of future interventions. So if you see the key messages of this whole presentation, there are innovative agricultural value chain finance and technology-enabled financing models which can drive supply of the smallholder finance in developing world. Some of the financing and investment models basically aim to provide solution to the structural issues, which is a very important word here, related to accessing financial services by the smallholders through value chain intervention, aggregation, and capacity support. Innovations in delivery models rely mainly on technology, as everybody was talking about, to expand outreach, build risk management tools, optimize the cost of delivery of smallholder finance. And policies need to act as an enabler. It should not be a stumbling block to successfully replicate the internationally good practices and financing models in India, in anywhere, and the scale of local business model. Along with the policy support, financing solution must partner with the market movers. We sometimes miss the market movers to scale and required to boost supply of the smallholder finance across the developing countries. Now, coming to the first slide is on the market segmentation and the financial needs. I tried here to provide some interesting feature that most of the financial institutions across the globe, especially in the developing countries, that we always think about finance as plain and vanilla kind of finance and an all one size fits all. But what we tried here is to provide three categories. One is the semi-subsistence farm community, one is the commercial farm families, and another commercial farm families is closely connected with the value chain. Some of them, the middle one is not so connected or the loosely connected. So there are some business and financial needs. Each of them has different needs. So we need to categorize them. We need to granularize them. So what I tried here. So if we see the livelihood, stability, and growth is the main objective of the semi-subsistence farm community. Whereas increased revenue and productivity is the main objective of the commercial farm who are loosely connected with the value chains. Whereas the grow revenue and grow their assets are the commercial farm families which are closely connected. I'm not going into the detail of each of them. I'm sure that AWG and DWG, they will share this with all participants. Technology accelerators. We have the technologies. There are technologies which are currently we call it the big five. The big five here are the big data, artificial intelligence, robotics, blockchain technology, and satellite imagery. So if you see this, big data provides all the granular data of the farmer, water cycle, fertilizer, and when you call it artificial intelligence, I also call one of them is the journey of any farmer from ancestral intelligence to artificial intelligence. That's very important. Still now, most of the farmers in Asia or in Africa, they are still following their ancestral intelligence, not artificial intelligence. So there need a huge amount of process in the to achieve this artificial intelligence. And then robotics are there. Blockchain technology is coming up with a big way. The SME financing, we are doing it. Satellite imagery happened to be one of the major issue in the climate change scenario. Then coming to the evaluating investment solutions, I have given kind of a checkerboard here. If you see the first two on your left, the relevance for smallholders and women farmers, and innovativeness of the solution will actually lead you to the maturity of the solution. Then if you see the aggregation and segmentation will lead you to the delivery approach. Application of digital technology, loan security, and guarantee will reduce the risk. Whereas enabling environment and visionary management will provide us, all of us, the original platform for investing in rural and agricultural finance. I tried here to define the innovative rural finance model into 5 categories. One is the value chain finance. Everybody of us are talking about value chain finance. There are some 5 focus areas I have tried to evaluate here, and some examples of the best practices have been given on the right side. So the first focus area of the value chain finance is the value chain finance with farmer collective-led model, which are one of the major emerging issues for the developing countries in Asia as well as in Africa. The contract farming or value chain finance with output buyers model, because sometimes we see buyer not as untouchable, but they are very important. They play a very important role here. Then closed loop input financing as the value chain finance model. Fourth one is the lead farm or dragon head outgrower model, being practices across the globe, many places. And finally, the producer segmentation model. So the producers need to be segmented. And there are some examples. I think some of them all of you might be knowing about it. I'm not repeating, but they are providing the best practices, which can be kind of exemplar or can be a leader. The next one is the risk mitigation and reduction. There are 5 focus areas again here. Commodity future options, which I think my friend was talking about, the digitization. Warehouse management, indexed and yield bundled insurance. So insurance cannot be alone, it has to be bundled. Then credit and other guarantees, fintech insurance innovation, and governmental risk reduction policies. Again, on the right side, there are examples of the best practices. There are a lot of examples. I have also taken some of them from Africa. I think my friend was telling about Ecad Africa. So that is already here. Then coming to the third innovative rural finance model, term and asset-based financing. There are 2 major focus areas I try to provide here, long-term lending and which includes asset financing. If you see of late, when we started our career in agricultural banking, we thought about more of the asset financing. Nowadays, it is more growing towards not so much of the asset financing. If you ask any public development bank, they are not much interested in the asset financing. They're farmers' household asset financing. Then the second one is the equipment loans, including lease purchase and pay as you go, like Uberization of your assets. There are some good examples, Freelance, State Bank of India. Then the fourth one is the blended finance. I tried to give here the 4 focus area on the blended finance and some of the examples here. First, the innovative women's small medium farm finance initiative. Rural SMF, youth and agriculture and agribusiness. Climate smart private public impact investment supporting agribusiness and SMFs. And finally, ultra poor smallholder intervention, where we need more of the capacity building. And some of the examples are given: a land bank, IDE, in Nepal. And finally, agri-tech and the fintech. So here we have given 2 focus areas: digital technology that facilitate SMF finance, digital technology models to minimize risk in agriculture finance, And second one is the digital technology that brings retail private sector investment. My friend Thomas was talking about the angel investors. And it should be like a digital platform, government programs to link with the smallholder. And we have some good examples, which you can see on your right side. There are 6 good examples we have covered here, e-registry, even Nirsal, my friend was telling. Then gram cover, collateral risk management, Crowdy from Indonesia, some examples from Rwanda. Then finally, walk the talk. We need to do some intervention, which actually we need the support from all our the countries under the G20 also. So first one is improve smallholder farming system and resource management. We must be investing more on the pre-sowing and post-harvest. Actually, if you see last 40 years, we are investing more on the after the sowing phase till the harvesting. But we need to invest more on the pre-sowing and post-harvest. Include risk management as an integral aspect of the financial services. Develop capacities of the smallholder farmer collectives and service providers. Business service providers I'm talking about. Segmentation of farmers. We need to segment the farmers. We need to segment the commodities to develop a tailor-made financial product. Plain vanilla financial products are not no more of use. Ensure economic and social inclusion of the smallholder farmer, including women and youth. Push through the reforms of agriculture trade by allowing the farmer producer organization, farmer producer companies in this business. Reduce the financial service delivery cost using the technology. Then escalate investment in technology with term finance and guarantees. Unlock the public database and smallholder farmers through agri-tech and fintech. We are talking about now the data democracy. So data must be democratized. And improve credit scoring and back office facilitate tailored financing and segmentation. I was talking about plain vanilla. Now we are talking about the tailored. And all across, incentivize the climate smart finance through guarantee mechanism. I think I'm done here. Terima kasih. Thank you very much.
Well, thank you very much, Professor. I think your presentation should have been given first because it's really a nice overview of the different financial instruments and also the examples you gave. So many different examples. We would love to learn more about a few of them, but I think we will explore that further. Thank you so much. Okay, I don't know whether we have a video for this presentation. I think we do. Okay, so we have a video from Africa. So please play the video. Thank you. Thank you so much. Thank you so much. This is a very a very interesting way of presenting Africa, but we have to take time to read the fine print in your presentation. Obviously, some of us have worked with Africa. Thank you so much for your presentation. It's extremely well compact and summarize so many important financial instruments. For the sake of time, let me move, if I may, to the fourth presenter. Last but not least, Thuraya Triki is the Director of IFAD's Sustainable Production Markets and Institutions Division. Before joining IFAD, Triki worked at the African Development Bank as manager in the Microeconomics Institutions and Development Impact Division, Chief Economist Complex in Abidjan, Côte d'Ivoire. She managed the division's knowledge products as well as a team providing support to AFDB non-sovereign lending operations. From 2013 to 2017, she was chief country economist at AFDB North Africa, regional department based in Tunis, Tunisia, with a particular focus on entrepreneurship, public-private partnerships, and financial sector development. Ms. Triki has also played a leading role in setting up the AFDB PPP hub for North Africa, and has been a senior from 2008-2013, and then principal economist position at the same bank research department, where she was part of the additionality and development outcome assessment team. So without further ado, it's my pleasure to invite Ms. Triki to give her presentation. Over to you.
Thank you very much. Can you please confirm that you can see my screen?
Yes, we do. If you can put it on. Yeah, okay, very good. Yes. Thank you.
So thank you very much, ladies and gentlemen. A very good morning, afternoon, evening to you. It's a pleasure to be with you today. My presentation will be focusing on agricultural investment and rural finance to support MSME activities. And that will be covering both trends, but also some of the work that we do in IFAD. I'm following the advice of Prasoon, who said we need to walk the talk. So the first message that I wanted to underline is the heterogeneity. Today we are sitting here discussing access to finance for MSMEs, but we need to recognize the high diversity and heterogeneity of MSMEs. What you see in the slides is the outcome of an excellent work that has been done by the SAFIN network, whose secretary is hosted by IFAD. IFAD is one of the partners. They tried actually to organize MSMEs in the agri space or the food system in different groups. As you can see, the word MSMEs refers to different businesses that are operating in different segments, be it farming, input and off-taking, services that comprise finance, market linkages, supply chains, but also that it includes small entities like smallholders, farmers, or actually their organizations. So throughout my presentation, when I talk about MSMEs, I would also refer, and actually I will be focusing a lot on small producers and rural SMEs, which are the target of IFAD, given our focus on small producer and rural poor involved in food systems. So as has been already underlined by my preceding speakers, what we know today is that the agri-SMEs are underfunded. There are about 220,000 agri-SMEs in sub-Saharan Africa and Southeast Asia alone. The funding needs stand at about 160 billion. Out of it, only 54 billion, or 34%, is currently met more by the formal financial service. I'm not referring here to informal financial services, because what we care about is also financial inclusion and the need for these MSMEs to address their financing needs through formal channels. So that makes the gap at around 106 billion. As you can see on the right side of the screen, there is also a high heterogeneity of the situation depending on what region you look at. Sub-Saharan Africa seems to be the region with the largest funding gap, followed by South Asia. But again, other regions that are not presented here because of maybe lack of detailed data, like Latin America, are facing also challenges. And of course, commercial banks still represent the major source of finance supply, but We are seeing encouraging financing also provide what we call the non-bank financial institution, public development banks. I know that has been mentioned in the Matera Declaration, and you all know that IFAD is also leading the platform actually coming from the Matera Declaration for Public Development Bank. And that's an opportunity for us to scale up financing to these agri SMEs. Yeah. A lot has been said already on the challenges, so I will be very specific. I mean, there are some persistent challenges that are common to different types of SMEs. They're not uniquely reserved or unique to the ones operating in the agricultural space. This includes the investment readiness of the SMEs, the weak capacity. A lot of SMEs, if you speak to banks or to other financial intermediaries, they often complain by the quality of the business models and credit applications that are being submitted. On the other side, we have also a problem of capacity from financial intermediaries to assess loan applications based on actually the capacity of the project to repay. So they end up asking for this high collateral because on top of it, they also do not have the necessary infrastructure like the credit scoring systems or credit bureaus to assess actually properly the credit history. Of course, the underdevelopment of most financial sectors in developing countries puts the system also in a handicap because the banks remain the main interlocutor. So alternative non-bank financial intermediaries who can offer solutions like factoring, leasing, are not necessarily very well developed. I think Prasoon hinted to that when he spoke about the need for segmentation, also appropriate financial products, which is also mentioned here. And again, the volume of capital, the lack of available capital, most of the funding available is short term. Actually, I remember a few years ago when I was still an employee of the African Development Bank, we conducted a survey showing that about 60 to 70% of the funding provided in Africa has a maturity of less than 1 year. That's definitely not adapted where you try to invest in CapEx, where you need to buy equipment and make long-term investment. On top of it, we need to add the complication of funding and addressing the needs of SMEs operating in the agriculture sector. Some of them are linked to the volatility of the agricultural market, the high vulnerability to climate change. We are seeing an increasing frequency and severity of the climate shock, but also other non-climate related shocks like COVID-19 and more recently the Ukraine war, Russia crisis, which is a war which is leading to a significant increase in the price of input, but also increasing volatility. So it seems that we are the crisis context becoming the new normal in agriculture and the agri-SME financing. There's also the issue of high transaction costs. Most of these MSMEs are small. They are also operating in rural areas where it's very costly and difficult to reach them. There's also the high risk, whether we talk about perception or real risk, and also the low profit margin in a lot of value chains. So here I wanted to just also give a positive spin. It's not only about the challenges. So one of the promising opportunities is the climate finance. Actually, you have a nice chart here showing that climate finance is today an opportunity of 632 billion on annual average. And that actually comprises an opportunity for access to funds for SMEs to do things better and in a sustainable manner, because every time we invest in agriculture, we need to think about the negative impact on the environment. We cannot do agriculture without keeping in mind that it's producing about 1/3 of greenhouse gas emission and is using 70% of the fresh water, including for irrigation. So we need to ensure that MSME access to finance has sustainability and climate as a critical piece. Nevertheless, while this figure could look impressive, the share of climate finance that today is targeting and benefiting agri-SMEs is very small. We don't know the exact figure, but what we know based on a study done by IFAD a couple of years ago is that smallholders are capturing only or receive only 1.7% of the tracked climate finance. So it's a very ridiculous amount. Second promising trend, and I think Prasoon has actually provided a lot of good examples, is digital financing for agri-SME. There are currently a lot of business model, promising solutions. Some of them are offering or facilitating access to finance through credit scoring and alternative assessment models, allowing a better credit assessment, enabling actually new delivery and distribution channels to remote areas, replacing the brick and mortar and also the traditional typical microfinance model that has been catering to the needs of small producers and MSMEs operating in the food systems. There are also interesting models offering access to markets, focusing on integrated food system, traceability, and fostering more transparent supply chains, but also funding to, again, I mean, to expand the pool of available financiers. For example, we have interesting development in the crowdfunding space. So all that offers, of course, opportunities, but he also, I think, mentioned some of the challenges available there, including the need for the infrastructure for connectivity. I remember the other speakers also mentioned that. Another promising challenge is the blended finance. By default, agri-SMEs are high risk, low return. So we need to fix the risk return profile to be able to crowd in more financing. A recent study that was done again by Safin, based on the largest database of blended finance transaction created by Conversion Group, shows that agriculture represents only 15% of the blended finance transactions. Only 3% include the climate resilience dimension. A lot of this money is not necessarily also going to the MSMEs. Some of it is going to large infrastructure projects. The transactions seem to be smaller for agriculture and below the $200 million, so lacking the scale to attract private sector financing and actually catalyzing more private sector capital. On the right side, you have some interesting models based on blended finance, platform facility that has been deployed and showing some successful track record attracting private sector to fund agri-SMEs. So as part of the walking to talk, EVAD has been aware, of course, of all these challenges that I listed, of the opportunities, and we have been investing a lot to address and tackle the issues. So since EVAD inception, we have invested about $4 billion in inclusive rural finance intervention. These are rural finance interventions that are meant to ensure that finance is made available, accessible, and affordable to small producers, to their organization, and also to rural SMEs operating in the food system. Our ongoing portfolio stands at 1.5 billion. As you can say, it's spread around different regions: Asia and Pacific, Eastern and Southern Africa, Latin America and Caribbean, North Africa, Eastern Europe, and the Near East, and Western and Southern Africa. We also cover a wide range of activities, including rural financial infrastructure, agricultural value chain financing. We address a lot the issue of demand side, because very often we speak about supply, but we also need to keep into consideration the demand constraints, bid, and also the issues of protection of consumers, which we do not talk about very often. And also, I mean, of course, most of the financing is going to financial service providers to incentivize them and catalyze more funding for rural MSMEs. Here, I wanted to share with you a few cases building on digital technologies. On purpose, I did not want to take examples of credit, because access to finance for MSMEs is not limited to access to credit. There are important things like insurance, payment, saving, etc., that we need also to ensure. So this is the first example of a project, in a public sector project we did in Kenya, where basically we supported with other parties, including the European Commission, a public sector project called KSAP CRAL. This program, among other, has funded an innovative e-voucher scheme for farmers. And what we did is that we plugged into this e-voucher, electronic e-voucher scheme, a form of yield index insurance that basically triggers the payment to the farmers. And these farmers, again, as I said in my first slide, I think was also these micro enterprises. So every time the harvest is below a certain established trigger, the farmer gets a payment in its e-wallet, and they can use it to ensure that they can get the necessary compensation to buy the input and what they need. So this project has actually benefited 85,000 smallholders who have been insured. A large part of them are women. And actually, as I said, it makes the money available for the next planting season. And this is also something that is extremely important in the current context of a heightened uncertainty and crisis. What we have learned is that bundling the financial service with other insurance with other financial services is extremely important for financial inclusion, for protecting the farmers, for unlocking credit, including to young people and to women. That needs to be accompanied by efforts to address the demand side, like sensitization, education of the farmers on the need for and the benefit of insurance, and also to ensure consumer protection standards are kept high. What we have learned also, because this initiative has entailed the collaboration between the private sector entity providing insurance and the public sector project, is that win-win PPPs are possible in the agricultural sector when we deal with this kind of digital empowerment model. The second example I wanted to share with you is actually building and leveraging on another opportunity that I did not mention in the first part of my intervention, which is diaspora investment. Some of you may know that actually remittances annually, migrants send back home 500 billion in remittances. Just to give you the scale, the entire ODA to agriculture is 10 billion. We're talking about 500 billion annually sent. We know that half of it goes to rural areas and roughly 25% is invested. So these diaspora investment and remittances are an extremely attractive and appealing opportunity. IFAD hosts a facility called the Financing Facility for Remittances, whose work is really seeking to leverage the rural development impact of diaspora and remittances. So an example that we did, that we created a venture capital fund in Somalia. I use Somalia on purpose to show that we can apply this model also into fragility affected context. So basically, it's a model that allows a co-financing between diaspora and the country that you see on the map, plus local banks in Somalia to invest in rural MSMEs. So we have supported 14 rural actually MSMEs operating in the agriculture sector, be it fishing, food processing, livestock, and that catalyzed $2 million, including $1 million from diaspora investment, with a total of 21 investors, and that created 241 full-time jobs. So that's also a creative way that IFAD has been using and supporting with partners who are actually funding this FFR facility to catalyze more funding for SMEs, including in places like Somalia. Another interesting example that I wanted to share is the recent private sector financing program that was launched by IFAD. What we noticed is that there is a funding gap actually within the MSME space and the financial intermediaries that are serving the small producers, their organization, and the high risk, low return agri MSMEs. So if you look at this space, you have most of the commercial funding has very limited focus on agriculture, limited risk tolerance, limited tolerance to low risks. And they're not necessarily, I mean, even when they work on agri-SMEs, they usually take the least risky, so the export-oriented, the trade finance aspect, which are asset-backed and less risky. The large DFIs are not necessarily operating in this space because their tickets are much more larger. So we have actually set up the niche for the private sector financing program to focus on exclusively on agriculture. We have a higher tolerance to risk, meaning that we are willing to operate with aggregator MSMEs who are serving and they are working with small producers and rural poor within the food system, with the non-typical financial intermediaries who are catering to the needs, who are usually typically considered as high risk, low return by other impact segments. So the program has some unique features, including an exclusive, strong targeting and focus on small producers and rural poor as end beneficiaries. So we do not work directly with them because IFAD is not in the business of providing very small loans, but we work through platforms, financial intermediaries, or aggregators or MSMEs whose business model is actually focusing or catering to the needs in terms of business opportunities or financial services with this target group. We are requesting complementarity with the in public sector investment, because one of the issues for the access to finance of MSMEs is that there is a very high fragmentation about the different programs that are trying to tackle this trying to tackle this issue. Actually, someone told me, and I didn't verify this figure, so let me put a disclaimer, that there are about 13,000 initiatives with an average size of 500,000 supported by donors to address some of these issues. So we need to actually create more synergies and complementarities. Last but not least, IFAD has 40 years of experience in funding agriculture. We do things like nature-based solution, digital technology, monetization of carbon credit, and these can offer innovative ways to create new solutions for to fund the agri MSMEs. I'm going to skip that because I think I exceeded my time. So just to conclude, agri MSMEs remain underfunded and poorly serviced despite encouraging progress. There is a need to work on different issues that have been covered by presentation, but also the ones done by our predecessors. Digital solution, blended finance and climate finance offer promising solutions, but are not a panacea. A lot of this money today is not actually getting to the MSMEs, to the small producers, to the rural poor, who are comprising actually this food system. Remember that 70 to 80%, actually 30% of the global food is produced by small producer. The share is about 70 to 80% in Africa. So there is a need to continue fine-tuning the model, doing the segmentation, working on the three issues of supply, demand, ecosystem, including the enabling environment, financial infrastructure. At IFAD, we believe that ecosystem approaches are needed to tackle in a coherent manner. Through my presentation, I tried to give you a sense of some of the efforts. Obviously, we cannot do it alone. We've been trying to engage with private sector partners, but also with the likes of public development banks. So we are coordinating the public development bank. We are using our convening role to also scale up the financing, including through innovative model like the one I showed from the FFR. We have also a platform for agriculture risk management, which is promoting insurance and many other products. So happy to partner with other like-minded investors and entities because this is a very important agenda that we need to get right. So thank you, and over to you, Chair.
Thank you, Ms. Triki. Another outstanding presentation, very well summarized, so I will not repeat the summary. Obviously, the focus was on SMEs, and a lot of it also was in Africa. The fact that SMEs are underfunded, there is obviously the funding climate is getting complicated because now we have entered, as you mentioned, the crisis context has become the norm for agriculture as we are piling up one crisis on top of another before we move to the previous one. The low profit margins in agriculture value chains is one of the, the sort of underlying weakness in the finance reaching to small scale producers. Climate finance, you mentioned, is a huge opportunity, but I would like to follow up with you in a question about how SMEs access these. You mentioned 1.7% of smallholders, so how can that be expanded? You touched on a number of points that actually have also been highlighted by the previous presentation, so that shows a nice complementarity there. So I'll skip the rest of it. I think the important role of IFAD, we know, focusing on small-scale producers. For the sake of time, and I think we have really had 4 outstanding and a little bit longer presentation that we accounted for. So if I may use moderator's prerogative and just ask one lead question to each of the presenters for the short remaining period. And if you don't mind, I'll start with the last presenter. So I'll ask you the first question. Given that IFAD is focusing exclusively on small-scale producers and opening up their opportunities through value chain development and through finance, can you give us an example of how IFAD is partnering with other partners in order to leverage or scale up the type of financial instruments you are contributing to through a value chain project or in a particular country? So focus on the partnership part, which is the last point you mentioned. Over to you.
Thank you very much for this very good and difficult question, Aziza. We can stay here until tomorrow afternoon, actually, for me to address. But let me try to be concise. So, IFAD engaged with different partners in order to deliver impact to the end beneficiaries, who are the small producers and the rural poor. One important and key partner has been the public sector. So through IFAD project, we work a lot with public sector entities in order to catalyze more funding. And through these public sector interventions, we also deploy catalytic financial instruments to incentivize local financial intermediaries or local and international businesses to fund and partner with the private sector. So we about 70 to 80% of our project entail a value chain component. So usually, typically what we do is that we try to organize the farmers, help them organize themselves, provide the financial services, the last mile infrastructure, and then we try to identify private sector partners who may be interested, for example, in of taking the product. So that's the kind of collaboration that we have. Sometimes it entails financing, sometimes it does not. We've been also, and I think the first presentation done by Francesco mentioned the PDB platform. So IFAD has been using its convening power also to gather a group and to lead this working group of like-minded public development bank, where we're trying to see how we can work with them in order to scale up their funding to inclusive and sustainable, to deliver a more inclusive and sustainable food system transformation. We've been also engaging more actively directly with the private sector. I mentioned the private sector financing program. So today, through this PSFP program, we're able to deploy also debt, risk sharing, other de-risking tools directly to financial intermediaries, to MSMEs who are working with or serving the needs of MSMEs. So in a nutshell, I would say we work with all partners who today have the ability and the willingness to offer either financial services or non-financial services to small producers and rural poor. And for that, we can deploy financing to address the issues, to catalyze financing, but also through non-financial intermediaries, because a lot of these issues, as said in my presentation by others, are about the capacity, so demand side constraints, about the environment. So we are increasingly also active in policy dialogue. There was an issue, also we work through platforms like the SAFIN, with CAPFIN, with Africa. So we are active in all these platforms where we're trying also to sensitize, raise awareness, and that's one of the reasons why I'm here also today. Thank you, over.
Thank you very much. One lead question to Prasun Kumar Das. Your presentation was excellent. You gave us a whole list of different financial instruments and the whole digital landscape. You gave also a number of examples, but you didn't have time to elaborate. So I'll give you a chance to perhaps pick one of those many, many examples you gave that is kind of a real best practice in terms of finance, small scale production, and and then de-risking agribusiness or agriculture. Or so give me one example from the ones you have listed and make it maybe 1-2 minute summary for us. Thank you.
Thank you, Dr. Aziz, for this opportunity. I'd like to just briefly talk about a segmentation model being now used by Bank for Agriculture and Agricultural Cooperatives in Thailand. The BAAC is one of the leading bank in Southeast Asia who are supporting the farmers. So they wanted to do the value chain financing as a part of their business model. And when they wanted to do that, they found that it is very difficult until they segmentize their farmer clients. So what they did, they categorize the farmer into A, B, and C. So A category are in the top, in the bottom of the pyramid, those who are in multiple in numbers, and they identify each of them and what are the niche product they are developing, their commodities and all. And the B is the those who are loosely connected with the value chain, And finally, the top of the pyramid is the commercial farmers. So what they did, that they designed the products and services for each of the category A, B, and C, and they try to segmentize each of them and develop their financial product for each of them. So it is not a easy job. So they took it around 2.5 years to complete the whole process. And when they roll it out, they rolled it out in the name of SMAE financing, that is small and medium agri enterprise financing. So they wanted that all the farmers become an entrepreneur in future. So they named it as SMAE financing, which is now a very important risk mitigation tool for the bank, and the recovery rate is around 99% in the SMAE finance, and that becomes a major financing tool for them. So this is a very good example, and we have also in consultation with the government of India and the NABARD in India, we are also trying to do it in India, replicating this segmentation model and in India. So this is a replicable model which can be replicated in other countries as well. Over to you, Aziz.
Okay, thank you so much. Thank you so much. We now move to Mr. Tassel from Ghana, from Africa. Another very rich presentation, and I would like to zoom in, if I may, to one of your three excellent examples you gave, the 1 Acre Fund, which also has this an interesting insight on how to combine digital and the human, and you cannot have a full digital. Now, this is a relatively an excellent best practice. Can you tell us if this is easily replicable elsewhere, and what are the conditions for it to be easily replicated, not only in East Africa, but maybe in West Africa and other parts, and what are the key requirements for these types of innovative solutions can be spread out? Over to you.
Thank you very much, Mr. Moderator. The question you are asking is a good question. 1 Acre Fund started from Kenya. Currently, they have moved even beyond East Africa. They are all over. And the point of success is on the final outcome of all the resources that they put together, whether financial or technical assistance or partnership. They are one into a lot of partnerships. And what they have done is that they have seen that even with technology, which is so good, which we are talking about, there are limitations to the technology. Perhaps it may not be due to the technology themselves, but those who will use the technology. So if you are asking even of one conditions, yes, you may have the technology. What about those who are going to use the technology, the smallholders? It means that you must find a way to make them digitally literate. There are also practices where they work with partners. Doing these things initially has a bigger cost, and you cannot do it alone. So one of the strategies is to go in with partners. And then thirdly, as I was saying, the financial outlay in the beginning is big, in the sense that you go to some village as they started, and they see that those who are farmers who can actually take advantage of their model don't even have mobile phones. So the strategy was that, okay, let's make mobile phone provision part of the credit that we will give to them. So they include even the buying with the mobile phone as part of the credit extended to the customers. And then also one of the conditions which perhaps may also be very important is KYC. So what happens is that their KYC is on 2 levels. They have their people on the ground who even monitor what is down there, and they also have the technology. So this combination is what has helped them to be able to expand inclusivity and to increase their own models outreach, and then also increase the incomes of the beneficiaries. So as you are asking, yes, it can be replicated. But if you want to replicate it, it means you must first learn of what they are doing. You can even contact them. It's easy to contact them. If you even invite them as a partner, you are in another country, and you even invite them as a partner, they will be ready to come because they are still in the process of expanding. So wherever there is opportunity, I mean, they will always take advantage of low-hanging fruits. So this is the initial answer that I will give to your question.
Okay, thank you so much. Thank you. Okay, now I'll turn to Francisco Rampa for this general question based on his very interesting presentation following the Italian G20 presidency. You know, investments required to develop agri-food industry in developing countries, especially in sub-Saharan Africa and South Asia, are vast. However, clearly public investments, which is something that you have emphasized in your presentation, will be enough, but we also know agriculture is inherently risky. This is one of the key features or stylized facts of agriculture. What are the practical ways to de-risk private sector financing at scale? And do we have models that you can point to or for possible replications? Over to you.
Thanks a lot for this important question. I think in general, blended finance schemes are the model to adopt as some of the European development finance institution and donors are doing together with African institutions, as Ms. Tricky also highlighted. IFAD themselves have put in place a number of blended finance schemes. There are different varieties of them depending on the scale of the investment, depending on the context that can be adopted, and you can refer back to my presentation and Ms. Tricky's presentation for finding ways to finance that at scale, because that's really crucial for the risking. And we can look at innovative pure private sector models, but to really reach some of the more marginalized players, in particular in rural areas of Africa and South Asia, really a component of concessional finance, in particular guarantees with the local commercial banking system to then on lend to cooperatives and not maybe individual farmers, but a group of farmers, value chain actors, and micro SMEs, that would be crucial. So there is a possibility to de-risk through guarantees and blended finance. And I would just mention another element of the model that maybe was in between the lines of every presentation, but it has to be stated very clearly. Partnerships and maybe value chain platforms are very crucial. You need to lend blended finance schemes and other type of innovative finance into the possibility of the smallholder farmers to have a regular voice, to talk to the investors, to talk to the policymakers who need to fix the enabling environment in order, of course, for the investment to flow and to be effective. You need the voice as well. You need a monitoring system. Therefore, in our experience, in particular in Europe-Africa relation, but even own African initiative, is that value chain platforms at the territorial level, depending on which value chains you're talking about, they can take different size and format, but you need a platform to coordinate, to get the financiers who are interested out there to talk regularly to the smallholders and the final beneficiaries. So platform, multi-stakeholder partnership, sometimes it sounds a bit like a blah blah that we all put in statements, but it is a reality, and it's absolutely required in order for the investment to reach the informal players, the marginal players. And there are good examples of practical, ground-based, contextual-based, local platforms that really are working, and there's a lot of literature out there, and we're happy to point to it.
Thank you so much. We have time for one last question and a 1 minute answer. And the lucky presenter is Prasun Kumar. This is actually a question addressed to you. So please give us a 1 minute answer. Based on best practice in several countries, what are the success factors for implementing each value chain finance model, including government support to implement this model at the rural farmer level? Please.
Thank you. Actually, I have already wrote it in the chat box, but it's still for the benefit of all. We can consider actually three major success factors. One is that understanding of the value chains in terms of flow of commodity and flow of finance. Basically, when we do a value chain analysis, in most of the cases, we only do the commodity. But there is a very important area which is, we call it the flow of finance. So some of the actors also do the financing. We also need to understand that and document that. There is one. The second one is the digital application of identifying the actors and their roles in the value chain. Some of them play the role of aggregators, some may play different roles, some play the capacity building, and the business development services they provide to them. The third success factor might be the enabling environment to support by the government in terms of infrastructure, market development, digital modeling, and like credit bureau, Uberization of the assets, and all these things. I think these are the major three success factors. Thank you.
Okay, thank you. I have now come to the end of this outstanding session. We had originally planned more time for questions, but I think the presentation was so rich, and it will take us time to review what you presented and learn more about it. So please allow me to thank each and every one, Mr. Francisco Rampa, Thomas Essel, Prasun Kumar Das, and Ms. Thuraiya Triki for your absolutely outstanding presentations and a short but meaningful discussion. Thank you so much, and it was a pleasure being your moderator for this session. I learned a lot, and I will certainly follow up with each and every one on future opportunity. With that, I yield back to the organizers for the next segment of this program. Thank you very much.
Thank you, Aziz.
Thank you so much, Dr. El-Bahri, and all speakers are for a very good plenary discussion. We highly appreciate for your time and also knowledge sharing and everything. So before we go into the next session, we would like to play a short video coming from Ivat, that's telling wrap up about this story. So the video, please.
Nos ha bendecido grandemente, vivimos en un país lindo, precioso, abundante agua, bueno, tantas cosas que tenemos, valles, ¿verdad? Muy preciosos, pero recuerde que en los valles están ubicados no las personas, ¿verdad? Que debieran de estar por lo fértil que son, sino que están unos pocos. Como que le faltan palabras para poder, digamos, ¿cómo le digo? decir tantas cosas positivas, ¿verdad?, de la tecnología. En un pequeño aparatito ahí se mantiene toda la información, ¿verdad?, de cualquier empresa, ¿verdad?, unos pocos minutos y tiene ya la información que necesita. Yo, antes de estar organizado, quizá agarramos con una pequeña cantidad hacia el mercado. Hoy no, hoy ya lo almacenamos, hacemos la recolecta, lo embodegamos, lo mantenemos y luego comenzamos a buscar el comprador, ¿verdad? Y más bien la bendición que ya no tenemos que andarlo buscando, sino que nos buscan porque ya conocen nuestra calidad.
La caja es una organización abierta, digamos, a la comunidad. El requisito es que, digamos, la familia o el productor o el emprendedor de la comunidad esté dispuesto a participar en la organización. Eso implica compromisos, puntualidad. Con la implementación de esta aplicación, las cajas podrán, digamos, mejorar sus procesos administrativos, sus procesos financieros y así, digamos, contar con información de forma más exacta, de forma más ágil.
Yo como joven quise meterme en ese papel de la tecnología porque aparte de que conozco mucho, así puedo ayudarle a los demás a ir paso por paso de cómo usarlo. La tecnología en un buen uso nos ayuda a aprender nuevas cosas, a meternos más en proyectos. Entonces como jóvenes tenemos que tener una visión y buscar a ser emprendedor.
Thank you very much. Now, we would like to enter the photo session. I would like everyone to open your camera. We should have this documentation to mark the last day of the webinar. So we have 5 screens. I will lead the process. On my count, the first screen, I would like you to hold your smile. On my count, first screen, 1, 2, 3, and smile, please. Now let's go to the next screen. On my count, hold your smile, ladies and gentlemen. 1, 2, 3, smile, please. Okay, we finished the second screen. Now to the third screen. Everyone, please open your camera. I would like to have you. Okay, on my count, 1, 2, 3, and smile. Thank you. Fourth screen. Is everyone there? Okay, I need everyone to open your camera and smile, please. Give me a very nice smile. 1, 2, 3, and smile. Now we go to the last screen. Last but not least, everyone, smile, please. I think everyone is very dark here, so we can skip here. Thank you. Thank you very much. Thank you very much once again, distinguished participants, ladies and gentlemen. Now we would like to start the wrap-up session. For this, we have two presenters, Professor Matshukur from ICASEP and our colleague Guillaume Guerre from OECD. Without further ado, we would like to invite Professor Shukur to deliver his note. Professor Shukur, the screen is yours.
Thank you, Wahida, Ibu Wahida. Please allow me to read the wrap-up of joint webinar on enhancing digital agriculture and rural finance for food security, 28-29 of June, 2022. The application of digital technology and rural finance in agriculture has played a very important role in improving agriculture performance, also has been instrumental toward rural transformation. On the other hand, digital agriculture is one of the priority issues in the G20 Indonesia presidency, namely the third issue, innovative entrepreneurship through digital agriculture to improve farmers' livelihood in rural areas. This to this occasion creates a history of the first time in the G20 presidency that Agriculture Working Group and Development Working Group has been working collaboratively to carry out the joint webinar on enhancing technology, digital technology, agriculture, and rural finance for food security. This joint webinar addressed the most challenging bottleneck faced by the small-scale farmers, particularly in rural areas, namely accelerating digital transformation and increasing catalytic investment, especially rural financing. These two are some of the main challenges and to be seen as opportunity faced by the farmer in developing countries. Furthermore, this joint webinar supports the agenda of the Matera Declaration in Italy 2021 related on the food security and adequate nutrition for all. For this reason, there are need action plan on agriculture investment and rural finance to support MSMEs activities. There is no one-size-fits-all approach to financing agriculture value chain. Also, financially sustainability is a key criterion for the development and viability of rural value chain. In the digitalization era, the empowerment of small-scale farmers will continue to be an important concern in creating a favorable environment for investment in digital agriculture, particularly in rural areas. Digital technology could be seen as market failures in rural area, considering the barrier in building the infrastructure. Therefore, building infrastructure is a key to underpin the digital technology agriculture ecosystem because there will be mobile network access, device access, electricity access, also information and data access. Moreover, it is necessary to improve digital literacy for smallholder farmers and for all actors along value chain, including extension and advisory services. Bringing digital agriculture ecosystem into smallholder farmer in rural areas usually relies on how digital extension or digital advisory service will facilitate an innovation network between farmers and many actors as finance provider, inputs providers, equipment provider, as well as facilitate the communication among farmers. All facilitation should be done using digital technology. Therefore, technical knowledge on digital technology is also pivotal for extension and advisory services to be mastered when working with smallholder farmers. In Indonesia, the implementation of digital agriculture has been realized with the agriculture war room that design directly control the implementation of agriculture development throughout the country. The agriculture war room use modern facilities to guide the entire agriculture development process chain, such as strategic planning for specific crop, monitoring production processes, and addressing issues related to agricultural development. From presentation yesterday webinar, we learned that most developing countries still struggle to realize the potential of digital agriculture. However, there are some examples from the implementation of digital agriculture, such as Plantix, Avaco Otalo in India, My Agro in Mali, Senegal and Tanzania, picture-based insurance in India and Kenya, DigiFarm in Kenya and Digital Green in India. Interestingly, Digital Green in India targeted extension workers to do digital advisory on how farmers control their own data to improve financing and market access, then further to gain additional value from their produce. We learned from today's presentation that the effort in supporting smallholder and micro, small, medium enterprises to access to finance need blended financing mechanism using public funding to mobilize additional private capital, including from commercial banks. It is necessary to foster public-private dialogues, coordination, and partnership to help addressing regulatory bottlenecks and enabling policy intervention on agriculture investment and rural finance. The way forward to implement the agriculture investment and rural finance in Africa can be applied by refocusing attention to investment in agriculture and provide enabling environment. Create successful public-private partnership models and redefine the role of state to improve information flow and remove some of the constraints that impede collaboration. Effectively promote and regulate the fintech and digital channels to minimize exploitation of smallholder farmers and MSMEs by deployment institutions, and promote blended finance and innovation of ICT in agriculture. The innovative rural finance model has been implemented in Asia-Africa countries in the area of value chain finance, risk mitigation and reduction, term and asset-based finance, blended finance, and agri-fintech. This rural finance model will improve smallholder farmer system and resource management, develop capacities of smallholder, and ensure economic and social inclusion of small farmers, including women and youth. To sum up, we would like to underline that the implementing digitalization in agriculture require digital agriculture ecosystem, including infrastructure, connectivity, affordability, improvement in farmers and other user capacity along value chain, and institutional support. The digital agriculture ecosystem, emphasizing on the effective collaboration of public-private partnership, also plays significant role to increase investment, financing access, and participation of women and youth in enhancing digital agriculture and rural finance for food security. Thank you.
Very much, Professor Matshukur. Next, we would like to have Guillaume to share in the wrap-up. Guillaume, the screen is yours.
Yes, good day, everyone. Thank you very much, Wahida, and thank you very much to the organizer for giving us a slot to participate to the ending session of this very interesting webinar, webinar. So I have just a few remarks from what I noted from those 2 days of excellent discussion. So I found the exchanges we had both yesterday and today very interesting and relevant for discussion at the G20 and beyond. So I should say here that I participate to discussion under the Agriculture Working Group mostly, but we also at OECD also contribute to the Development Working Group as well to support presidencies, of course, and members. So first, regarding the opportunities of agriculture digitalizations. So I thought the exchanges we saw yesterday comfort our view that digital technologies provide opportunities for farmers, supply chain actors, and policymakers to improve the productivity, sustainability, and resilience of food systems. So they create new value added and can facilitate trade, including for smallholder farmers, offer new solutions to connect different actors, and work better together to meet old and new challenges. So the examples provided at different scales yesterday throughout the presentation show both the range of options available for farmers, for smallholder farmers in particular, also for market actors, and their already proven successes in some regions of the world and potential to grow at a larger scale. So in essence, this technology offers remedies to information problems that are particularly prevalent in the agriculture and food sectors. In economics, we talk about two main information problems: constraining markets and transactions and creating potential problems such as environmental externalities. First, what we call incomplete information, and then second, information asymmetries, because those two are related. So farmers, supply chain actors, and all the actors we heard about today around rural finance, they all face these types of information issues in their everyday lives. For instance, farmers misinformation on how to optimize their input use and their specific conditions, how to prevent or treat plant or animal diseases in the best way, as discussed yesterday. They misinformation on weather condition, market, or the availability of funds, as we heard yet today. Information asymmetries, on the other hand, constrain insurance and credit markets for farmers, that where actors cannot distinguish farm performance and effort without additional information. So at the same time, while there are all those potential, there are challenges to reach this potential. So I really enjoyed the presentation by Dr. Anbu yesterday that differentiated 3 tiers types of challenges. The first one being really, broad infrastructure types of problems, and then getting more into data issues and access, and then more into specific skills of farmers. And so while the discussion was mostly related to smallholder farmers, we know, at least in our work at the OECD, that some of the same constraints affect farmers in developed countries as well, related to access to digital technology. Tier 2 and Tier 3 constraints, as you defined it, are prevalent and constrain the application of digital technologies in, I would say, all the G20 countries, so much beyond all or only developing countries. And there's still lack of connectivity in a number of rural regions. It's interesting also to see that today we heard about the speaker from Africa. It was a fascinating presentation again that talked about the youth and young farmers and their potential and the importance of just creating opportunities for them in Africa. Well, when we look at a number of OECD countries we work with, and including the one that was on the video on Mexico, we're facing an aging type of population of farmers in developed countries. And so those different populations face different types of challenges. But still, for both of them, digital technologies have a potential that should be met in the future. We also saw yesterday and today as well that the enabling policy and regulatory environment, while progressing over time, is not completely ready to embrace the digital transformation everywhere. On a related point, one aspect that was perhaps less discussed on the digital discussion is the role of digital technologies to improve government policies themselves. Policymakers can benefit from digital technology, which can support the design and implementation of agricultural policies that could be better targeted and more efficient. So an example is agri-environmental payments. So our work at OECD tracks agriculture support in emerging economies and OECD countries. And we found, and that's a report we released last week, that around $800 billion were spent annually on the agriculture and farm sector by governments, transferred in one way or another, and some of that through subsidies, not all of that, and to individual farmers. Unfortunately, most of that amount is made via transfers that are market distorting and that could potentially harm the environment. So we think, and other things, of course, including UN partners, that one way to remedy this problem and participate to the transformation of the food system is to reconsider the use of some of those funds towards public goods or income transfer that are more efficient, or the environment. And so if you do go towards payments like that, including on the environment, it's really important to be targeted, tailored, and closer to results. And that's something that digital technology can bring to the policymakers themselves. So now coming back to today on rural finance. So this is an area I know a bit less about, and I learned a lot. So again, just like the moderator, I was fascinated by the presentation. So but I know that this is an area of critical importance, including for agriculture development. I noted with interest the key role of G20 in the discussion today, the material declaration of the 2021. That was that seems to be an engine of potential efforts in these directions, and its implementation may accelerate the process of better financing for agricultural development and rural financing in particular. I also think that former commitments on responsible agriculture investment could also be really noted in this discussion, particularly those that were developed in 2020 under the Agriculture Minister's Communique with the Saudi Arabia presidency, where they talked about responsible agriculture investments as well. There are multiple innovative financing mechanisms, as highlighted in particular by Mr. Das from APRACA and Mrs. Tricky from IFAD today. They and others also talked especially about climate and blended finance mechanisms as one of the options that could have potential, although it won't solve all the problems. So digital technology was highlighted as bringing a potential to a number of those innovative financing mechanisms to be improved and to get better access and to go faster. At the same time, financing mechanisms face multiple constraints, from enabling environment to flow, access to credit, etc. And digital technology can alleviate a number of those or limit those if properly used, as we've seen from specific examples in Africa and Asia today. So the two-day discussions, and I'll close there, raised the question of whether digital challenges and the financial challenges that we've heard today can be lifted together. So whether digital can actually help really effectively remove those two different constraints. And the high benefits of farmers, as we've seen on the video showed by Mr. Essel today in particular, suggest that there are opportunities to progress on financing effectively with digital technologies, given the benefits they provide to farmers and people on the ground and MAs as well, in a way to unlock finance. Studies that show the positive impact of those pilot and mechanisms and technologies development will hopefully influence interest of public and private finance institutions to grow faster. To conclude, I salute the effort of the G20 Agriculture Working Group and Development Working Group to bring together speakers from the digital and rural finance communities. This exchange shows that while multiple actors and actions will be needed to unleash improved financing and outcome for farmers, governments should be reassured that efforts in this area are bound to lead to a multiplicity of benefits. We at OECD are partly convinced on the need for agriculture and food systems to be more productive, sustainable, and resilient to achieve the SDGs and the UNF food systems challenge. And the mechanisms of today's have a central role to play. Thank you very much.
Thank you very much for your insight, Guillaume. That's the end of the wrap-up session. Distinguished participants, speakers, moderators, ladies and gentlemen, now we come to the closing session of this joint webinar. For this, we would like to invite Mr. Kurniawan Aryadi, Acting Director for Multilateral Funding, as well as he is the Director for Bilateral Funding Bappenas, to deliver the vote of thanks. Mr. Kurniawan, the screen is yours.
Thank you, Ibu Wahida. Distinguished panelists and participants, good evening, good afternoon, and good morning to all of you. It is an honor for me to deliver the vote of thanks on behalf of Ibu Raden Siliwanti, the co-chair of the G20 Development Working Group, as he is now performing Hajj in Mecca. My name, as mentioned by Ibu Wahida, is Kurniawan Aryadi. I am Director for Bilateral Funding and currently the Acting Director for Multilateral Funding, Indonesian Ministry of National Development Planning, or Bappenas. In the past 2 days, we have held the joint webinar on the G20 Agriculture Working Group and Development Working Group. Allow me to applaud and appreciate everyone who has made this joint webinar possible, especially those who joined virtually across different time zones. We thank you very much. Colleagues, the past 2 days have been a milestone for our collective work in the Indonesian G20 presidency. This joint webinar, the first to be held jointly by the Agriculture Working Group and Development Working Group, is one of the real actions taken in the fulfilling the G20's commitment in leading collective and coordination action at the global level through its leadership. More importantly, it serves as a knowledge-sharing platform discussing a very timely issue affecting millions, if not billions, of people's livelihood, especially post-COVID-19 pandemic crisis. In the past 2 days, we have witnessed how much we can learn by sitting together in this forum and taking our turn to share our knowledge, best practices, and lessons learned on enhancing digital agriculture and rural finance to achieve food security. During the first day, we took note of the experiences in advancing digital agriculture in India, Kenya, Mali, Senegal, Tanzania, and many more. From this experience, we learned that building advanced digital technology ecosystem will strategically boost the productivity and entrepreneurship of small-scale and rural farmers, particularly with two interconnected approaches. One is the on-farm digital technology application, such as farming tools, fertilizing drones, cooling storage, etc. Two is the off-farm digitalization through data collection, analysis, management, and transfer production, distribution, or financing. But implementing digital agriculture is not without its challenges, such as digital gap, illiteracy, inaccessibility, and unaffordability. Therefore, collaboration principles are indispensable by building an inclusive digital revolution, iterating and sharing learnings, strengthening collaboration across sectors and disciplines. On day 2, today, We were given some insights on rural finance. The concerns could be seen from several perspectives, such as mobilization of capital into agriculture investment, addressing the accessibility of financing instruments and capacity of the farmers to optimize the resources. From the session, we can infer that coherent and innovative approaches are needed to tackle those various challenges to rural finance, with digital, blended, and climate finance approaches offering promising solutions. We also highlight the role of financing for de-risking agriculture practices, such as through crop insurance, which has been implemented in Kenya and other countries. We also take note that rural finance should also be supported with an adequate regulatory framework and capacity development for the farmers to utilize the available resources. Recalling how the discussion was putting forth the perspective of rural, small-scale farmers in developing, least developed, and small island developing states, we are confident that this webinar will create catalytic impacts to enable, to elevate, and to empower small-scale and family farmers to better access the market. As stated, they are the ones who make up a huge portion of food supply, yet they are most prone to be overlooked. We hope that the valuable knowledge shared on this webinar will continue to guide our work on enhancing digital agriculture and rural finance to improve the livelihood of farmers in rural areas. Consequently, it will contribute to our efforts in achieving food security, realizing the zero hunger goal, and implementing the Matera Declaration for G20 members, developing countries, and beyond. This webinar will not be possible without the presence of a diverse lineup of panelists joining us today to share their knowledge, experience, lessons learned, and best practices on the given topics. It is our pleasure to be able to hear your valuable insight. Therefore, we are very grateful and humbled for your contribution, and we look forward to meeting you again in the future. On top of that, we would like to express our appreciation to all participants. Given the importance of the topics discussed on this webinar, your active participation is genuinely appreciated. Through your participation in this event, the valuable insight shared in this webinar could reach all of you, and we believe it would help us in working our way on realizing our shared commitments on the Matera Declaration on achieving the Sustainable Development Goals. Distinguished ladies and gentlemen, our achievement in the past 2 days is not only cherished, but for the Development Working Group, it will be reported in our accountability document, 2022 G20 Bali Update, where we showcase the progress of all G20 development commitments. This is the testament to one commitment turned into concrete action to create real impacts, which we hope many more commitments will follow up these footsteps. As I have mentioned before, this webinar is the first to be held jointly by the Agriculture Working Group and the Development Working Group. So I hope that this would not be the last. We look forward to future engagements between the Development Working Group and Agriculture Working Group. I thank you. Terima kasih Bu Wahida. Time's yours.
Terima kasih Pak Iwan. Thank you very much, Mr. Kurniawan Aryadi. Now, without further ado, I would like to invite Dr. Sudi Mardianto, our Director of the Indonesian Center for Agriculture, Socioeconomic and Policy Studies, Minister of Agriculture, to deliver the closing remarks and vote of thanks. Dr. Sudi Mardianto, the screen is yours.
Thank you, Wahida. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon and greetings to all of us. His Excellency Secretary General of the Ministry of Agriculture of the Republic of Indonesia, distinguished speakers, resource persons, and moderators, honorable representative of G20 member countries and international organizations, and all participants of this webinar. First of all, I would like to thank the Almighty God, Allah Subhanahu wa Ta'ala, who has guided us until we finally arrived at the end of our webinar today. We give thanks to God because only with His permission can this event be completed properly. Through this webinar, we have learned that the application of digital technologies are contributing to help, first, creating digital economic value so that the use of digital technology is more inclusive to accelerate economic recovery, especially for micro, small, medium enterprises, development, and financial inclusion. Second, more inclusive and productive development of digital literacy and skills. And third, digitalization of sectors that contribute as source of new economic growth and accelerate the economic recovery. In this precious opportunity, allow me to especially thankful His Excellency Secretary General of the Ministry of Agriculture, Dr. Kasdi Subagiono, and Dr. Skenender Siahaan, Deputy Minister for Development Planning of the Ministry of National Development Planning, Bappenas, for their guidance in the implementation of this webinar. Thank also extended to Dr. Maximo Torero for his keynote speech that's inspiring this webinar. I would especially express my sincere thanks to our speakers. First, Mr. Brian Kring, Platform Leader Big Data SDR. Second, Mr. Krishnan Palasana, India Country Director, Digital Green India. Third, Mr. Venkatachalam Anbumozi, Senior Economist and Director of Strategy and Innovation Area. Fourth, Mr. Francisco Rampa, Strategic Advisor to the Italian Special Envoy for Food Security. Fifth, Mr. Thomas TSL, Secretary General of Africa. Sixth, Mr. Prasun Kumar Das, Secretary General of Africa. And seven, Ms. Tauraya Triki, Director of the Sustainable Production, Markets and Institution Division, IFAD. And also to our moderators, Mr. William Tang, Beanstalk Australia, and Mr. Aziz El-Behri, Food Policy, Trade and Rural Development Module FIO. Then also go to Mr. Professor Dr. Matsukur and Giom to the excellent wrap up this webinar. And my special thanks go to Kurniawan Aryadi from Minister of National Development Planning, Bappenas. Salam kenal Pak Kurniawan Aryadi for such a wonderful cooperation in organizing this webinar. My heartfelt thanks also extended to my colleagues in organizing this webinar. I understand the hard work of the organizing committee has been carried out in close collaboration from the initial preparation until we are at the closing session of this webinar. Finally, I would once again express my gratitude to all of you and hope that we could meet sometime in the future in different events. Stay safe and keep in touch. Thank you and goodbye. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Sudimardianto. On behalf of the organizing committee, we would like to extend our sincere thanks to all participants, invited speakers, and moderators for your attendance and contribution in day 1 and day 2 of the first joint webinar, Agriculture Working Group and Development Working Group, Enhancing Digital Agriculture and Rural Finance for Food Security. We do understand it might be difficult for some of you to join the webinar virtually. However, we highly appreciate your active participation during this event. I'm Wahida. We are looking forward to the follow-up initiative drawn from this important webinar. With the spirit of togetherness, we recover together, recover stronger. Stay healthy, keep safe, and have a good day. Goodbye from Bogor, Indonesia, and thank you all.
Thank you. Bye-bye.
Thank you.
Thank you.
Video nggak dipasang, musik.
Saya menyampaikan selamat kepada Italia yang telah sukses menjalankan presidensi G20 di tahun 2021. Dan Indonesia merasa terhormat untuk meneruskan presidensi G20 tahun 2022. Kami akan menjamu Yang Mulia dan Bapak Ibu di hamparan pantai Bali yang indah, yang menginspirasi gagasan-gagasan inovatif untuk produktivitas G20 ke depan. Sampai bertemu di Indonesia, terima kasih.